18. I'm your host Nigel, and with me today is Gurmeet Chadha. Hi Gurmeet, we're getting into the festive mode, but markets, well, a little bit gloomy actually. It's looking a little bit nervous. The worry is in terms of confidence in the markets, as well as every time you get constructive on the index, something or the other crops up. Yeah. How do you see the Nifty? We were just at around 11,700 a few days ago. Now we're headed back towards 11,000.
Yeah, so you're right. I think clawed back almost 50% plus of the gains we had because of the corporate tax cut. I think, Nigel, there are two things we have to watch out for. In fact, three things. One is I think there is one concern on the financial system stability. Right. I think in every Friday, it's been called a dark Friday. We have something or the other which crops up. It's a cooperative bank. A few weeks back it was Altico Capital. Right. And we have had so many downgrades. Investors, having some MTM hit even in debt funds. There are NCD bondholders who missed interest payments. So there is this, there's a bit of negative wealth effect. Also, I think the economic growth, I think will take a little time to come back. While the steps are long-term, welcome. We are seeing some early signs though. So if you see the vehicle registrations, for example, right. I mean, that reflects the retail sales. While the wholesale numbers we get to know, those are up about 22%.
Right, retail sales numbers look good.
It started. I mean, it's just early to call it. Yeah. So my sense is maybe in a couple of months, both the growth will start seeing a bit of a recovery. Yeah. Optically also, since the numbers were, started coming down from December, especially on the consumer-facing side, right. That will start looking good. Also watch out for global liquidity. I was just checking the M2 supply. Now, M2 for viewers is basically cash plus time deposits, demand deposits, your saving account balances. In US, they have expanded by some $570 billion. That's the fastest expansion since 2011. All right. So we'll have to watch out global liquidity. If money keeps, if you will see more QEs and excess liquidity, and once the sentiment turns, and sentiment can turn quickly. We've seen that, with some good news. So one need not be very pessimistic right now. Okay. At the same time, it's not a time to jump in and place all your bets. Maybe just go a little slow and staggered. I think that should happen. So
you're clearly a buyer into this market. Absolutely. Is what I understand. But you're just cautioning our viewers that it's not the time to lay all your cards down.
Absolutely.
So maybe in fact, gradually buying in there is something that that you would look at, and maybe in fact after the recent correction, it could be a possibility that we're heading towards those base levels. Nifty back towards maybe 10,800. If we see those levels, it'll be back towards the pre-FM big announcements.
Difficult to say that, but looks like the way we are seeing every upside being sold into, you could see some more correction. Maybe difficult to put a level to it. Okay. But I think the big picture one has to keep in mind. Your oil prices are low. Yes. Monsoon has progressed well, and you would see divestment after a long time. I mean, I don't recollect especially after Hindustan Zinc, any credible divestment which has happened. So this crisis could just be a blessing in disguise, where because in the end of the day, the government is the biggest stakeholder.
True, absolutely. So let's get your take on a couple of stocks then. BPCL and Concord, both of them have been on fire actually. They have given you big returns. Well, today we had a bit of an off day. On BPCL, you had a CLSA note that came in there. They're not too impressed with the company. But if there's going to be a strategic sale, there's going to be plenty of interest out there. So how would you play a couple of these names? And Concord, we know they're going to be one of the big beneficiaries in terms of the dedicated freight corridor. But today there was, I think a claim from them of around 1,100 crores. And authority said that maybe 800 crores of that will not be accepted. That'll be only 2.5% of its current market capitalization. How do you approach both these two companies?
So I'm a little contrarian, positive on both, despite the recent run-up and some pullback. See, BPCL, we only, often only discuss the oil marketing, club it as an oil marketing company. True. It has 7 SBUs, which is strategic business units. Right. So there is, retail outlets, there is, aviation service centers, there is an LPG bottling. They have about 51 LPG bottling locations, and they have, there's some 7 SBUs they have. Asian GRMs are reversing, so Q1 was an exception. It was quite bad. Even the marketing margins look a little better. Also, BPCL is the most productive of all oil marketers. So its per pump sales per month is some 185 kiloliters versus the industry, which is 150. Okay. So it has a great infrastructure, great retail reach, and my sense is what will happen is the rub-off it will happen on the other PSUs. All right. So it's not just BPCL. Probably you will see even HPCL and others will see. And the grey market news is, while I can't confirm and who the buyer is, that the price they have an offer at, and obviously they will go for the auction, which could be in the range of 700, 750.
So you would be a buyer on BPCL at current levels. You think the refining bit is coming, is falling in place, the marketing bit as well is falling in place, and I think there's a sweetener in terms of the land bank as well that's supposedly talked about. So BPCL, you would be a buyer. You'll be hoping a big buyer comes in and takes a strategic chunk of the government's investment. What about Concor?
Again, positive. I think people are not really putting in the impact the dedicated freight corridor will have. On the freight movement. So I think it's almost a monopoly player. And we've seen the average tariffs go up. Very well run company, one of the few exceptions. There are already news of Adani being keen on picking up stakes. So it fits well with some of the private players as well. So I'll go with it. I'll be a little tactical maybe in Concor. If you see a good upside, maybe it may not be a bad idea to even take some chips off the table. But positive on even Concor.
Okay, because today you got a dip. The stock went down all the way to around 560.
Actually, because of the
560, 570 or
so. But we don't know whether they will challenge it or not. The market is concerned because 20% of the PBT is this particular amount, and that's the reason you saw the reaction. But if you take a more medium-term thing, I think and if you get a good strategic buyer with management stake, I think it would be good for the company.
Good buy. So you would be a buyer on both BPCL as well as Concor on these dips. Okay, let's focus on a couple of other companies. Sunil Tiwari is asking us, what's your view on ITC as well as Federal Bank? On ITC now, for the longest time possible, we've been talking about it, valuation-wise, it's attractive. It trades at a sharp discount to FMCG companies. The counter argument is, hey, you can't compare ITC with the other FMCG companies. But how would you view this particular stock? I remember it corrected to around the 230-240 levels. And then the government of India said in this current ETF divestment that they're doing, we're not giving any of our stake up. So, to come out there and buy it from the open market. What would your view be first on ITC and then Federal Bank?
See, it looks attractive, Nigel. It's 20 times forward earnings, which obviously you rightly said. It's not really FMCG. 80% is still tobacco. What weighs it down is that it's hotel business, which is 4%. Is very, very capital, it drains it of the capital, so it pulls down the ROEs a bit. Also, there is now concern that the government might, after 2 years of break, might hike the excise on tobacco.
Because tax collection is the problem for the government.
And I think that's where the concern is not on valuations. I think the FMCG business looks good. Input prices are soft. The tobacco we saw first time, the margins go up. If you see the Q1 numbers ITC had. So if government doesn't tinker with the tobacco duty, I think the stock will see a good run up. So I don't see much downside either. So little neutral on it, but to add more positions, I'll possibly wait and see how the fiscal space evolves.
Okay, all right. And what about Federal Bank? That's the other query that we're getting in.
So there are a lot of attractive ones, including Federal, including even RBL at the price point it is.
So Gurmeet, let's break it up then. Since the queries come in on the banking name like Federal Bank, today we had Bajaj Finance and HDFC Bank. They declared their numbers or their operational performance for the past quarter. A pessimist would say, hey, it's not as good as it was in the past. Well, otherwise, if you're looking at the buying in the stocks, the way the stocks have moved, irrespective of the market condition, you would say, well, there's a rush to quality. There's the expensive stocks are getting more expensive. So how would you position yourself if you have a view particularly on Federal Bank as well as the banking pack on the whole?
So if I were to add, I think I would add an ICICI and HDFC right now. What will happen is the stronger ones will become even more stronger. If you see the industry deposit growth was in single digits. HDFC had a 22% deposits. I mean, staggering number. And 19% advances growth. And I think great initiatives being done. I think they're the highest sellers of iPhone with the debate. So I think he's really taking it on, even on the e-commerce side. And I think he has a great thought process in terms of how to be digitally more relevant in the way things are changing. So I think what market will do is it will polarize it further. There is right now some fear. So even on the liability side, you will see movement happening. So they will. So the industry. So by the market will. BankX typically grows 1.5 times GDP. Right. And these guys, since they are growing 20%, you will see them benefiting from cost of funds. So the liability gets strong. And on the financing side, the only ones who are actually lending and lending, with prudently and aggressively. So they gain on both sides, which actually and if you see the weighted average lending rate, Nigel, it's only gone up 28 basis points. Versus 130 bips, 135 bips. bips rate cut. So actually my sense is the NIMs might even expand. The cost of funds goes down, and you haven't really passed on the way it should have.
So ICICI Bank is from the banking pack. You would like ICICI Bank?
ICICI and HDFC both.
HDFC Bank, both of them you would be buyers out there. And what about from Bajaj Finance? People said valuation-wise is expensive at 3 times, at 4 times price to book, at 5 times price to book. Hey, we're at 6 times the price to book. What do you say about that?
It's always been expensive. I think this question of Bajaj Finance, I think last 4 or 5 years we are trying to answer. So if you see its leadership in products, it's in products which are under-penetrated. So lifestyle financing, LAP, I think we have very limited players left. Two-wheeler financing they've picked up. And so risk underwriting is great. The assets have, the advances number as they're filed is 1.35 lakh crores is what the loan book is.
And some people are saying, hey, that's disappointing.
To me, Bajaj Finance is a consumption stock. I think you should not link it with a pure, proper NBFC. So I will be a buyer at Bajaj Finance at all levels if you have a 5-10 year view. But you're right. We've seen that whenever it runs up too sharply, it gives you maybe an opportunity. Maybe a FinServ looks a little better to me, because I'm seeing the general insurance and the life insurance business also turning around. 55% of FinServ is as it is Bajaj Finance. Right? So maybe from relatively between the two, I might just be tempted to look at a FinServ right now.
Okay, all right. Then, Gurmeet's quite clear. Gurmeet is saying stick to quality. That is important. Don't try to go for that valuation argument and say that the promoter will turn around tomorrow and he will release his pledge on his shares. Go with the best, at least as of now. Let's move to our next query. Then Vijay is asking us, he's saying, hey Gurmeet, are you painting your house for Diwali? No, I'm just kidding. Actually, Gurmeet says, will there be some Diwali cheer? Would Berger Paint be a good investment bet? And also, Vijay wishes you a very happy Dussehra as well.
Thank you. So I'm Nigel, very positive on building materials as a space, and I think obviously I like Asian Paints more. The dependency on the institutional side of the business and the automotive industry is lesser, and we've seen volume growth and revenue growth in a tough quarter. And I think my sense is government will announce more SOPs for housing. I think this is a clear focus area. They need to deliver 6 crore houses, and if you see, there is a structural shift happening. People are moving up from lime wash to decorative paints. Asian Paints has all the 3 categories well served. So it has a Royale at the higher end, and at the lower end it has brands which tackle. Repainting cycles have shortened, since you were asking about whether I'm getting the painting done. These houses, so that's a shortened.
Even I'm getting my house painted.
So repainting cycles have shortened. We are moving into a nuclear family from joint families, more units being created. To me, building material is a structural story. So not only Asian Paints, I will be even positive on a Pidilite, the pipe makers.
And Berger Paints that he's talking about?
I mean, I would relatively be heavy on Asian Paints, and the fact that oil is cheap, titanium dioxide, which is a key component, is cheap. And Asian Paints is a broader home improvement play. They are migrating into a broader home improvement play and not just decorative paints.
All right.
The preference.
So that makes sense, right? Because everyone was wondering if auto sales are not going about, houses are not selling, but then how come paint companies are doing well? Because I think the period between the time you paint your house once to the second time or the second to the third time, that period has reduced.
Really short.
So that explains why, in fact, some of these paint companies, they're giving good volume growth despite the sales of autos or maybe houses not selling at the same pace. Gurmeet is positive on some of these, paint companies. Asian Paints and Berger Paints as well are a couple of stocks that he likes. Rajdeep is asking us, what about, these are the dicey ones, what about NCC and what about Yes Bank? These are interesting companies. They have fallen a lot from the top. While Gurmeet comes up with his view on NCC and Yes Bank, we have Kaushik who asked us about Asian Paints. Well, Kaushik, Gurmeet is positive on Asian Paints as well as the other painting stocks as well. But let's get back to the query on NCC and Yes Bank. Stay away from these two.
Yeah, avoid for now.
Avoid for now.
Nothing against, in Yes Bank in particular, let a credible promoter come in. There are already talks of their being in touch with few technology firms, including Microsoft and Paytm. Let the fundraise happen. I'm not immediately concerned from a liquidity perspective. I think probably RBI also will have it covered, and they've released their liquidities. Let a credible promoter come in. You might enter late. The price point is obviously it's definitely attractive. But we have seen it on governance. It's the race to zero. If it doesn't improve, it doesn't improve. And you have a better growth stories in banking, which are more stable. ICICI is 2 times book. I mean, clearly, I think one good quarter could get re-rated very quickly.
So don't try to dabble in Yes Bank. Let things clear up. For the time being, if you want to buy a banking stock, go ahead and buy ICICI
Even
Bank.
Axis, the top 3 ones, you know, one can buy. NCC, I would prefer L&T over NCC.
Okay.
I think there was some stress on the working capital days.
Sure.
There was this, you know, some stress on Andhra government.
Yeah, new government coming in, cancelling projects.
So, yeah, and then I think the Telangana government is probably trying to do something there as well. So my view is L&T is a better play. They have a Lakshya strategy in place where they want to reduce working capital, increase ROEs, improve margins, and they're progressing well. You know, even the order profile looks good.
Okay, all right. So Gurmeet, you're saying that even in terms of banking or in terms of construction companies, you want to play those infra plays, go with the best, go with L&T and go with ICICI Bank or go with Axis Bank. Yes. Those are the options. Earlier, in fact, Gurmeet also told us that he's quite positive on HDFC Bank as well. So sticking to the large names out there. Well, I want to tell our viewers out there that Gurmeet comes down to Mumbai. He meets his clients. He gives us some time here on Get Rich with CNBC TV18. And obviously, he flies in because he has to fly in and fly out. He's flying out later tonight. But what's your view on the aviation space? I ask you this because we have a query coming in on SpiceJet. I don't know whether you like Interglobe or SpiceJet, or you prefer just, you know, using the services rather than playing in the stocks.
I think aviation looks interesting. I think, you know, so the load factor is clearly moving up. The government is keen on setting up more and more airports, more routes coming in. The affordability has gone up. But, you know, there are too many moving parts in this space, and, you know, especially the, you know, the fuel prices, the way it is being leased. Yeah. And there have been some governance issues on some of the units, not with SpiceJet in particular, but with... So I would prefer Interglobe over SpiceJet at current price points.
But would you look to buy aviation?
I mean, tactically, yes. Looks attractive. Okay. It's a great story. If they can resolve those board differences, I think they're due for some, you know, multi-year growth as far as the aviation goes. The better way to play a growth in aviation and travel probably could be, you know, some of the good hotel stocks, maybe something like a VIP, something like Indian Hotels, where Taj is clearly focused on an asset-light model.
So VIP would be you're looking to play the luggage space.
So that's a better way to play the travel part, the services part, because as the per capita income goes up, the consumption pattern changes from goods to high-end services. And
so from the aviation pack, you're saying that if you had to play it, you would buy Interglobe. If you're looking at some other ways of playing it, then you will look at a couple of other names out there. Could be a VIP and could be some hotel names.
Something like Indian Hotels.
Something like the Indian Hotels. Okay, so positive on both those two counters. Final query, let's take in one. What's your view on Pyramid Enterprises as well as Z Entertainment? Both those two stocks have seen a sharp correction from the top. Would you be brave and look to buy these stocks, or you say, hey, there are plenty of other stocks out there, let's stick to quality?
You know, Pyramid, I think one can avoid. I think there was a lot of news of, you know, one strategic investor coming. You know, same. I think let a good strategic guy come, infuse money, and then the kind of lows it has made, even if you enter 20% later, I mean, you will still be in for a good run. Right? Okay. And I think they've managed relatively better vis-a-vis some of the other wholesale, you know, lenders. Z, I'm tempted to buy, with a disclaimer that I personally hold some Z stocks in my personal portfolio. I think what we've seen is a technical correction. I think it's often because of and 90% of the promoter holdings are pledged, and that's why you're seeing this. But I think as an underlying asset, if you see Z, it's a clear leader, the advertisement revenue, the subscription revenue, the OTT platform, which I think is a great future and will give a great run to some of the PVR and the other multiplex operators, doing very well. So on operating parameters, on a standalone balance sheet, Z is a good asset. The promoter pledge, you know, so investors are advised once they are able to resolve. A lot of fund houses tell me that October end, there could be another partial you know, So once the, you know, this hang gets of pledging pledge gets cleared up, probably that's a better time to add to the positions. With a disclaimer, I hold.
Okay, so Gurmeet has put his money into the stock. He's telling us that, and he believes that operationally things look pretty okay for Z Entertainment. All right, it's that part of the show, Gurmeet, where we ask you for one stock. You've spoken about a lot of stocks out here, but that one company that you would believe that, you know, investors can put their money in there, maybe for the next 18 to around 24 months. Which one company would that be?
So two companies.
Two companies.
So I like, you know, I think insurance and general insurance again are multi-year growth stories. I think what we are seeing now is as economy picks up, as more and more people move into the higher per capita range, I think you see the services, which is aviation, financial services, do very well. Right. I like SBI Life and HDFC Life, both in the life insurance space. You know, one can pick either. They are clearly gaining market share. If you see the gross premium written, it's growing 20-25%. HDFC actually went up 30, the Q1 had 30% growth. The VONB, which is value of new business premium, which reflects the profitability of the new business source, is growing, at a very, the VONB margins are 29-30%. The dependence on ULIP is coming down. The participatory products are going up, which is basically high margin products.
So you're giving us a lot of reasons. So you would say you could buy either of these stocks?
Either of these stocks. SBI is relatively better, 2 times embedded value. Versus
SBI Life and HDFC Life, both those two stocks is what Gurmeet is talking about. Yeah, Gurmeet.
Yeah. And the quality of profit is going up. Earlier profit, so from a 100 crore loss now to 1200 crores profit for SDFC Life. Now the proportion of surrender of policy profits and investment profit is coming down.
Okay.
The core profit is picking up.
Okay.
So even the quality of profit for both these insurers, and SBI, for example, today insures 2.4 crore lives. So that number is going to staggeringly,
yeah, and still under-penetrated,
So 24,000 branches. I mean, 1 policy a day, and you're looking at some, 25,000 policies being sold every day.
So you would say buy a basket of both these two?
Both these one, and even general insurance. So look at something like an ICICI Lombard. Very, very good play. Motor, health, crop. We are seeing fire insurance gaining a lot of prominence. And I think as awareness goes, as things pick up, I think another very, very good play.
Okay, all right, Gurmeet. One final question then, because today pharma stocks were under big pressure in today's trading session. What would your view be on these pharma stocks? Like, when I was learning about the markets close to around a decade or so ago, pharma was the defensive. Now that's getting clean bold. You had, Auto Pharma down 15% today. Glenmark Pharma was down another 10% odd. And from the time the finance minister has come out with these tax announcements, that sector has been one of the worst performing sectors actually. So tell us about that.
Because they already are paying an effective lower tax. Yes. Most of them, some of them are MAT companies. Most of them are in special tax zones. See, pharma, it's not a homogeneous space, Nigel. Sure. You have to break it up into maybe 3 or 4. The one is your, branded generic space where, the likes of Abbott, Merck, these guys come in, doing very well. So Abbott, for example, the top 5 generics contribute 45% to the top line. Great margins, great brands, doing very well. So I'll be a buyer in something like an Abbott. Now, the second is obviously your generics, which are domestic formulations and APIs. What I like there is Ipca Labs. Okay. It has about more than 350 formulations, about 80 APIs. Therapy leader in anti-malarial, segment, does very well, has this contract with global supply chains, doing very well. Then there's something like CRAMS, where something like Divi's, where you actually don't make the final drug, you make an intermediate drug.
And today Divi's was outperforming as well in today's trading
session. So it's a good business, 40% generics, 50% CRAMS. Generics gives you volume, CRAMS gives you margin. And since it's a more B2B play, your relationship with the innovators, matter. So my view is that, if you want to be, brave and want to play pharma, play it through a fund.
Okay.
So there are hospitals, there are generics, there are CRAMS. So it's for a layman investor, there are too many.
So which mutual funds would you recommend?
So there are very few pharma funds, Nigel, unfortunately. So there is, SBI, there is Reliance, there is ICICI Healthcare Services. Maybe if you want to be, I think the valuations are good. Yeah. If you want to be a little, want to play that story, maybe a, good 3-month. STP, SIP, with some of the leading fund houses would be a better strategy.
Okay, all right, Gurmeet. Thanks so much for coming down to our studio and for giving us all those views. Pleasure. Always a pleasure talking to you. Well, on that note, we'll wrap up on this edition of Get Rich with CNBC TV18. Thanks so much for watching.